No matter which market you were trading, this has been the most hated rally in history across the stock markets, Bitcoin, and of course, cryptocurrencies. The masses, they were expecting a lot of downside in 2023. We know the markets have been up since that point. They're expecting downside for BTC. Remember those times calling for $10,000 Bitcoin? Well, that didn't happen. So when the hell are we going to see a correction for BTC? Let's dive into that in today's video, along with ETH hitting $3,000, breaking that key resistance level. ETH, BTC also on a charge. We're going to cover some of the altcoins, looking specifically at key areas for entry and exit, along with the S&P 500 and the NASDAQ, looking at these corrections that have begun to take place across both of these markets. You're at your home of macro cycle analysis. Hit that like and subscribe button. Let's kick it off with the links in the top of the video description. Our free crypto and economic report went out yesterday. Make sure you check your inboxes. All right, guys, let's take a look at where we sit in the macro cycle. Looking at the traditional markets, stocks tend to do better in early February and worse in the later part of February. Just looking at this post here from Ryan Detrick. We cover this often, just looking at the seasonality of the market to give us an idea of what to potentially expect in the markets. As we currently sit for the S&P 500, yesterday was down 0.5%, put in a lower high at the moment, but higher lows, very short term. The size of this move so far is 2.6%. The main thing that we want to do here, day in, day out, is just record the correction if the correction continues on. The main theory that we're covering here for the stock markets, because we're in this macro bull market, this everything bubble, prices continue to surge, the corrections will probably be more so short-lived compared to the upside. For example, you get 50 days up, it's probably unlikely you'll see 50 days down consecutively. Now, the next thing we are recording is the correction. How much was that correction in terms of percentages? What we've seen in the past is on these grind ups, these reverse crashes, if you will, is that the corrections are typically single digits. You will get some double digits, but typically they're single digits. So to the downside, if this is in fact the top at the 12th of Feb, we're sitting at around 2.6%. We go back to this white line here. This white line is the previous old all-time high, which you may expect some sort of support if, of course, this is the top. That brings you down to about 5% correction. That also lines up with the previous tops before it broke out decisively to the upside here, roughly 5%. Now, to the 50% level using the October low, about 9.3%. So in each of these occasions, it's still a single-digit correction. The market would have to go as far as the previous top here in November, so the previous resistance level before it broke out again, all the way back to about 46, just under 4,600 points. That would give us that double-digit correction. So it's not impossible, it's just probably unlikely at this stage. So having a look at that again, looking at the seasonality for February, seems like we're relatively on track here. We've got 29 days in February for this year, and the average February is the orange line here. And typically from roughly around this point, you start to see a bit of a decline. But note the orange, if you possibly can't see it on the side here, the decline is very minimal. The move to the upside was about 0.4 to 0.5%, and then back down it gets you to about -1% for the month of February. So very minimal type of moves. As for the NASDAQ, it is going to have larger moves, of course, larger move to the upside or downside, just a bit more volatility in the NASDAQ. So far, we have seen a break of the daily swing chart. You can see this low here on the 13th. So now we have a confirmed downtrend, lower highs, lower lows, 3.7% to the downside, coming back to the old all-time high. That's our white horizontal line here. That would take us out to about 7.5% correction. And then if it was to get further back to the 50% level, using the October low, it's at about 11%. So we're not talking about the NASDAQ when we're looking at that single digits only, but it could go close to that double digit correction. If it does get to the double digits, probably somewhere in that teens area. Now, Bitcoin just threw a massive spanner in the works. It had a pretty significant sell-off on the short-term chart here after a pump to $53,000. It dropped to $50,700, causing some liquidations here. Our highest longs being liquidated, roughly about 200 million. That's the highest longs liquidated since the 23rd of January. So roughly about 4 weeks now. The highest longs have been liquidated. In terms of the overall 3 months now, one of the highest ones. So we're starting to flush out some of the over leveraged folks who are trying to go long on every single breakout. And then to the flip side, it's trying to flush out the shorts as well. It hasn't been a huge short day yet. We're looking for somewhere in the vicinity of over $150 million liquidation to get to that point of being one of the highest days. As you can see, going back to the 8th of January, that was your 155, and then all the way back to the 4th of December was 200 million. So once it gets to that sort of 150, 200 million, that could be enough of the short getting liquidated to reset the market from what we've seen in the last 3 months. From shorts and longs getting liquidated to new all-time high prices, I popped this poll up on X just 2 days ago, looking at whether Bitcoin will get to a new all-time high before or after the halving. The results were pretty standard: 60% after the halving, 30% before. I suspect over the coming weeks, then obviously the before halving will drop as we get closer to the halving. We're about 6-7 weeks away from that now. It's due to arrive roughly early April, could get extended out to mid-April, just depends on the blocks being produced. And a mere 9% saying no new all-time high in 2024. So what has happened around these halving events in the past? Many have looked at the halving as being this time where once it hits, we shoot up to new all-time highs. And from what history has shown is that that doesn't happen. Bitcoin price doesn't just shoot up to a new all-time high. So it's really going to come down to your timing. What is your outlook here? Are you expecting on that halving event for the price just to go to new all-time highs within a few days, maybe a few weeks? The history has shown that that does not happen. So have a broader outlook, possibly over the coming months, and then you could expect a new all-time high. So from 2016, from the halving, it got to a new all-time high, which was at the top here, around $1,100. Got there in about 6 months. So if you got 6 months up your sleeve from the halving, new all-time high. What happened in 2020? Well, there's the halving there in May. By November, we got to a new all-time high. So again, about 6 months from that halving. If we do the same thing this time, April is the halving timing, 6 months out, tells us about October. So dead on point with the timing that we're looking for here, roughly around Q4. It could squeeze in there at the end of Q3. Maybe we see some sort of pump after the US or the Northern Hemisphere summer, and we start to see the markets rise up. But typically, seasonally, we tend to see the markets sort of fade off coming into summer. Typically near the halving, we have seen markets rise up into it, but then take a brief pause. The last halving in 2020 was one of those times where we did get about a month or about 6 or 7 weeks of a pause. You can see it went up into the halving, but paused. The next month also came back down, and then you had a couple of weeks before the market pushed up again. But you still had roughly 1, 2, 3, 4, 5 months before the price really did get going and explode. And it was 6 months until the all-time high. We know from history, we know from the charts, at that point, at that 6 month point of the new all-time high, there was about a month or so until the altcoins got going. And they got going against their BTC values as well, which gave you that extra boost to your bottom line, that maybe 34x or 35x. You see what I'm doing here with the titles? That is the timing that we are looking at for the big gains. Can things change? Of course they can change. Is this time going to be different? I don't think so. The charts aren't suggesting that just yet. What we will know if the times are different is my little baby right here. Looking at Bitcoin USD, the weekly chart, and the closing areas here. So looking at some sort of signs that we would see a correction in crypto coming around that halving point. Yes, what we've just looked at is the rising into that halving. People get super excited, but then you get basically a sell-off and a pause. A sell-off, even though it was minor, and a pause. Did rally a little bit, but we're not seeing any sort of explosive move. And remember, we did have COVID just 2 months earlier, where it was a huge push to the downside. So you're seeing that rebound effect come into that halving as well, which is potentially why this little move happened just after the halving. But again, it's roughly around that sort of 5-ish months period that the market is still trying to just hold its ground. Here, months leading into the halving, there is your halving, 1, 2, 3, 4, 5 months, the breakout, and then basically hitting your new all-time high. Now, before we look at the signals here, the correction signals, I specifically use this chart here as a reminder about the market sentiment, the fear and the greed. The fear at the bottom of the market, it was going to go to 10 grand, never happened. Last cycle, it was going to go to 1 grand, never happened. The same deal now. We're sort of seeing a lot more people saying that the price is going to hit a new all-time high before the halving. This never would have occurred 5 months ago. If you asked that, probably wouldn't even think there'll be a new all-time high in 2024. And now you've got 30% of people thinking you're going to get a new all-time high in the next sort of 6 weeks. I see that as a very timely reminder, especially where we currently sit in this market. About 5 months up from that low, you get the extremes at either end. Same thing happened in 2019. And we had that extreme move to the upside at 14K. Everyone thought we were going to go to a new all-time high before the halving, and there was just going to be more and more upside without some sort of significant correction. Onto these particular signals. The arrows at the top are where the market has broken out of key consolidation. Now, the thing that follows these particular arrows is a reversal. So you can see it broke out of the June rally, and you get the reversal. Then you can see it broke out of the April, or basically March, banking crisis rally, and then a reversal. You also had a breakout, a smaller breakout here, reversal, another test, reversal, market heads down from that point. Then you had the breakout again from the consolidation in the mid-30s, reversal. Tested it again because of the strength of the market at that time. This was the ETF news, so we can all understand that this was a much stronger news time and much stronger sentiment to the upside than there was previously in 2023. Had another attempt at a breakout, massive reversal. That put a spanner in the works, at least in the short term. Price corrected. Now we're seeing the same thing to the upside, but the differences that we can see are when the market breaks out to the upside, you want to see continuation to that upside. Doesn't mean you can't get a correction, but you want to see continuation. We got that on the breakout of January of 2023. We got that in the breakout of October 2023. And then you had this consolidation at higher prices, basically a flag forming before we got the next breakout. And now we're seeing a similar sort of thing, the breakout and the higher closes on the strength. So the sign here that we're still waiting for, because the days have been so small. We've had very, very tight ranges here. So we have to wait for more signals. I'm not trying to push any sort of narrative or any sort of agenda to a bias to the upside or the downside here. We just have to go with the trend at the moment. I'm not saying that it has to correct, but if we saw lower closing prices on the weekly chart underneath the previous resistance levels, that would be an early warning sign that we're probably going to see further downside and at least a longer time frame underneath those previous levels. So for now, the trend is up, the prices are still closing higher. This could consolidate above previous levels like it has done in the past. You got the breakouts right here, consolidated above the previous price targets, which means those calls to the downside, which means you can start to set your price targets a little higher because the market is showing relative strength to the overall picture. It could be showing strength at prices higher than the previous resistance levels, which means the likelihood of lower prices, the mid-30s possibly, is not likely to happen. That's how we rate the strength of the market, which then allows us to assess our risk in our own investments. Should we be waiting for much lower prices or a more shallow correction? That's what we're looking for here. We're trying to find signs of strength and weakness in that chart. Now, ETH has broken above $3,000, 2 days, closing prices above the 50%. We've also got ETH BTC looking quite strong and some altcoins to get through as well. But a quick shout out to our traders doing extremely well in TIA Premium. Now, if you want to see their results and some reviews of TIA Premium, the link is in the top of the video description for the free TIA report. You'll receive a link to get on board with the free Discord where you can review the trade results 500%, 100%, 24%. That's bonkers. 1,000%, 100, 200, you get the deal. Check it out. Link in the top of the video description right there. So for Ethereum above $3,000 now, this has continued to surge. Essentially, it's what we have been looking at on the channel going back now 4 or 5 days as the ETH BTC chart was looking relatively strong compared to where it has been. So these are those times where you would look to start flipping out of some of that BTC to ETH if you wanted to play it completely safe. I know a lot of us want to get degenerate and go for 35x gains today, or 34 today, maybe 35x tomorrow. But if you want to play it a little bit safer, maybe go with something that's less volatile. ETH is one of those tools there. And as we've been watching, it has continued to break to the upside. From that September Saturday video, 1, 2, 3, 4, here we are above the 50% level, the short term here, still waiting on the break to the upside even further for more confirmation. Remember, the earlier you get in on the trades, the higher risk they are of failing. The failure is the breakdown of the previous support levels. So far, it's doing not too bad. Now, in terms of failures, this is what one looks like. Sol BTC, Sol USD, different story. Bitcoin's still going up, therefore your USD is going to go up. But the Solana, the altcoin, has been bleeding out against its Bitcoin value. That's where you look at something like the dominance, and it has broken down from the 50% level. And if it gets below the previous low here in January, that would be a price support failure, and you would expect lower prices from there. So just looking at the previous highs here, roughly around 180,000 Satoshis of those tops. And then if we're to extend our 50% level back to some previous significant bottoms here, this was the FTX dumping all the Sol, fearful bottom. Remember that point around September where everyone feared FTX was going to dump their bags of, 80% of the Sol holdings. It has led to one of the biggest pumps Sol has seen in the last 2 years. The news is always instilling fear. Just follow the charts here. So we're looking at the 50% level, going back to that significant low point. You can see the 50% comes out right on top of where that previous resistance was before the market broke out. So what we're looking at here are areas of potential accumulation on significant support levels. I know everyone's sort of waiting for this next coin to pump and blow up to the upside, but sometimes it's just as important to look for where the price could come back to for a significant entry point and maybe a DCA into a particular altcoin that's on your radar. So that's a look at Sol BTC in this case, even though it's holding up against USD. That's the look at that sort of flippening, same sort of deal that you do with Ethereum and Bitcoin. If you're selling out some of the Bitcoin into ETH, that would be that time that you're looking to do it. So I had Injective USD up here as well. There is our short-term 50% at $29.70. If that was to break down, then you would look to lower prices here, roughly around 20, because that's where the previous resistance was, which may become support. But of course, it's still a long way off. That's 36 bucks down to about $20 in terms of percentage. That's a significant move there of about 46%. So that's why we keep watching BTC here on the short term. If we're to get a pullback now leading into the halving, looking at where we were in the halving in previous cycles, where there can be a small correction, there can be something more significant, and then Bitcoin goes on its run, typically we would see altcoins pull back a little, and that would be a good buying opportunity leading into that next stage of the bull market and that crazy altcoin mania stage of the bull market. Now, another way to trade altcoins would be something like this. Just looking at Casper here as it broke out of the previous high here of 15.5 cents. The 50% level, good entry. You missed that. It's on the breakout of the swing chart. So that's the TIA again swing chart, free 7-day trial. Check it out because it also helps with your entries and exits. Entry points above swings, exits below swings for losses, but you can also look at profit targets to the upside as well. So ETH is still on its tear above $3,000. Remember, it's only had 2 days up there. So if we are to see a bit of a correction here, watch out on the ETH BTC chart to see if it can hold its strength against Bitcoin. We looked at some altcoins as well here, just in terms of potential entry opportunities using the 50% level and the swing indicator, of course, support and resistance, our old friends there. The traditional markets are holding up relatively well. It doesn't seem like there's anything to be too concerned with at this stage, as even the S&P hasn't broken a swing bottom. Plus, there is plenty of room to move to the downside. That's it for today's video. Like and subscribe. I'll see you back here at the next one for our 35x crypto gains in the bag. See you then.